Good morning. This is Vince Lanci and with the Opportunistic Trader, and you're watching the Gold Fix. Right now, uh, as I am a dad, I am fielding a text from my daughter who's looking for some work for her book. So please bear with me. This is kind of funny, although it may not be good for you. Let me just take 1 second here. But while I'm doing that, there's a post. I want you to pull that post up and take a look at the charts quickly so we can talk. So we can talk about what it is that is important today and tomorrow. And I'm looking for what I need here, and that is there. Okay. All right. Hold on. I'll be right with you guys. You see that post up there? Okay. On what you're looking at on your screen. I gotta get back to work, honey. Love you. All right. Okay. All right. So here we go. Let's get moving. Thank you very much and for your patience. All right. So what we're doing is we're looking at a three-way split screen, and eventually we're going to have my lovely mug in there. And from there, we're also going to be able to take questions because I think that's very important. Rather than listening to people do a diatribe, it's better to have more of a dialogue. Watching a lot of philosophy. Okay. Anyway, here's my there's Trump on the right hand side. You see gold. On the left hand side, you see Twitter. I froze Twitter at Donald Trump's tweet. But what I want to go through quickly before we get into the actual action today is you've been hearing me talk a lot about the peg to China, to the yuan, and how I don't think it's imagined. I think it's real, and I think it will be very important going forward if it isn't important enough for people already. Now, I had been showing this with a red line, and the red line is kind of arbitrary because you can move it up and down. But what I decided to do today was take gold. If you were using, let's say you're in England or in Europe, you would use an XAU divided by a CNY. Now I chose the CNY, the Chinese yuan, as opposed to the CNH, which is commonly referred to as the offshore yuan, because the onshore yuan is the one that's regulated, and there's a difference in price between them. Now, I want you to look at this. This is, I think, very important. It's important to me. Obviously, everything here is my opinion, so take it with a grain of salt. But I got a lot of experience in this, and I'm smart enough to say that I don't know everything. Now, I had been claiming since as far back as mid 2017 that there was a peg, and I showed it with the red line. Here, I'm showing you a channel starting in mid 2017 with the yellow lines. There's your yellow channel. Okay. Now, that's before the big sell-off in gold, and right underneath that, the chart underneath that is the same weekly chart of gold. This is all spot for this conversation in dollars, just a regular weekly gold chart. Now, notice that staying with it, the gold yuan chart, that there is a channel. Okay, now, and then notice that in say I'm going to call it around April, you see a little red channel in there. There's actually a tightening, a tighter channel within that channel. Now, admittedly, these lines are a little bit arbitrarily drawn, but they're not, they're not exact. So I'm not proposing get long above X or short below Y, but I'm just showing merely as guidelines that the yuan tied even closer to gold during this time period, which I thought was kind of weird, and I really didn't understand it, and I frankly still do not understand it, but I recognize it. Because I recognize it, I respect it. Now, if you look at that chart and you just look right below it, I have things lined up pretty well, I think, on that. During the time that gold rallied in 2000 and late 16 to 2017, I'll push it down a little bit more so you can see the time frame there. You will see let's see, so that's like December 16. You will see gold rally with the yuan, and then while gold continues to say, well, an Elliott wave style, two forward, one back, two forward, one back, all the rally all the way through, say, I don't know, it looks like August of 17. It's been capped at that point. It's been capped on the yuan chart. It's now in a channel. Okay, so the channel, so the range up. Can I use my mouse here? Do you guys see my mouse? Let's see. Do you guys see? I want to see if you guys see my mouse or if this is set to hide my mouse. Okay, good. You see it. All right. There's a little bit of a lag, but you see it. Okay. From here to here, gold goes up in dollar terms. And from here to here, gold goes up. But then it now is in a channel. And this yellow channel moving down is what I'm referring to. Now, this is what I refer to as, and I've gone through it before. I'm not going to take up too much time on it. Basically, as China going off of a dollar standard, to be very general and inductive in a broad way, off of a dollar standard and onto a gold standard, not a gold standard, but a bridge. No one's going on a gold standard again. I'm sorry. Maybe Rickards is right. Maybe gold will go to $10,000, but that's crazy. It's just not. I don't think it's going to happen. Gold, they won't admit that it's money. Okay. So then what happened is, now going back to the dollar chart, you see this precipitous but controlled fall starting in, say, April. Now, two things happened during this time period. One we know of, primarily starting in June, the trade war started, or people who understood what was going on in the market saw the trade war starting, and that led to dollar strength, which we're not discussing for this moment. But there's another thing that happened, and I can say I know this. I know this as a person, as much as a person could know without having all the facts. That during the QT phase, during this part of the QT phase, Venezuela had already defaulted. They were selling gold. Emerging markets had to sell gold so they can raise dollars. But I thought that there would be a bigger, looking back, I thought there'd be a bigger divergence away from the yuan, but actually it pegged it stronger. And this is when, and this is back to that red channel, this is when China started debasing the yuan more. And they were trying to counter us with monetary policy by weakening the yuan. If I'm over your head on some terms, or I'm speaking too fast, it's not a comment on intelligence. It's just a comment on terminology. When a lawyer says reds and say loquitur, all he's saying is the thing speaks for itself. Quid pro quo, tit for tat. Everyone's got lexicon that they hide behind or use to be more concise. Economists are the worst at it. But that's, it's not a science, it's an art. So anyway, what I'm looking at here now, and I correctly called gold as having to come back or sell off to that red line I drew in a previous post. But now here I am looking at it in a little bit broader scale, and I'm saying, looking at the top again, the top chart, here we are now above, right? We're out of this little red channel, and now we're above everything. And I'm saying to myself, what are some of the factors that could be causing gold to have such relative strength? And one could be an ease of worry about the trade war. Another could be people are buying gold because of Brexit. A third could be people are buying gold, not a lot of gold, but a little bit of gold because of the government shutdown. And all these factors are bullish gold. Some are bullish dollar and bullish gold, but they're all bullish gold. I have found in the past, and again, the past is no prologue to the future, but I have found in the past that they don't last long. And I'm looking for a sell-off. That could be a cynical, jaded, long-term gold player. Believe me, but I've been biased bullish my whole life. I bought calls, until I bled. People who know me, I think XDM knows me very well. I can't see the chat room right now, so I'm just going to babble on. So what we're looking at here is the market is above even the yellow channel. And so part of me wants to say, this won't last long, gold will sell off for all the reasons that I described before. The government shutdown never really makes gold go up forever. The trade war will continue. Gold isn't really going to be something held if there's a crisis in Europe until 2 out of 3 fiat 2 out of 3 fiat products are debased, and that's not really going to happen. So I spent too much time on this, but you can see what I'm looking at and draw your own conclusions. That makes me, well, bearish because I think it should regress to the mean, right? A little bit of Larry in me. And also it makes me want to be bullish above it. Now, if you remember, I also got a weekly signal to be bullish gold above 1236 basis February. And that bias remains true. Uh, I want to quickly go through what gold looks like when someone is liquidating. I referred to the QT thing. Now, in this chart, you look at gold and you see I've drawn blue lines to show slope, and I've drawn geometric shapes in yellow to show what the dollar did during that period. Now, using the top chart first, we're going to stay with the top chart only. During the period from say 2018 through April 2000. Beginning of 2018 through April 2018, you saw what you would expect. When gold rallied, the dollar weakened. When gold dropped, the dollar rallied. And look at the slope, the first blue line. The slope is, I don't know, call it that slope, whatever you want to call it. And then that slope correlates more or less with the first yellow rectangle. Look at the steepness of the dollar rally and versus the steepness of the gold sell-off. So this is an ocular map here. All right, let's call that normal because that's our baseline. And I've looked at other things before that. Then you have the dollar choppy and bullish. That's in the oval, the yellow oval, but gold crumbles. Now, either gold is being demonetized, meaning it's decreasing against all fiats, or someone is selling. And it's been my opinion that someone is selling, and I stick with that. Now, if you look at the last half of the oval, the dollar actually, the last section of the oval right here, the dollar weakens. All right, again, we're on a weekly chart, but underneath it, gold chops. And I think that's the remainder of the selling coming in. People are selling into strength. Now, we go back to what I would call normal behavior. Gold takes the last blue line higher, but the dollar is going higher. So what's going on here? And I've offered suggestions before. You can make your own conclusions, but it's been my experience that when that happens, gold doesn't survive. But it also coincides with the time frame that gold has become more tied to the yuan, in my opinion. So the last few days have been unusual and bullish, we thought. Now look at this yellow square here. I'm looking at the last few days because I just got a buy signal and I'm looking for reasons to be bullish or not bullish. And I see gold go up with the dollar going up, and I go, hey, that could be a short covering rally. It could be whatever reason, but that's kind of cool. And then I see gold go down with the dollar going up, and I say that's normal. And then for the last two bars, actually the second to last bar, the green bar, gold goes up and the dollar is flat, more or less. Actually, it's down. But you can see that the correlation isn't perfect there. But this is a daily chart, and daily is more noise than weekly. But still, nonetheless, gold should have sold off pretty strongly on this slope here at this little mountain. And from here to here, it did sell, but it didn't give back all of its gains. And then the second day of red at we'll call that Mount Dollar there, the top of Mount Dollar, you have like a little bit of a doji. Now, I'm not going to talk about it technically, but I would think that gold would have given back all of its gains and then some historically. So now I'm walking away from this very, I'm kind of conflicted. I think gold's going to sell off because of the yuan peg, but I'm looking at gold's behavior, and I don't really see major shorts in the market, but I do see shorts in the market. So why don't we go to the VBS, which gives me the alert that we may have a sell signal coming up. And sell signal on deck. This is the 4-hour gold chart. Now, I don't have a sell signal coming right now, which means gold can drop $50 and I won't have a sell signal. It's just something I missed because I don't get a risk reward on it. But gold, the Bollinger Bands are almost as tight as they have to be before we have a sell-off. Now, you'll notice I don't have my 5-day historical day volatility numbers in there because I wanted more of the chart to show. And frankly, I'm not sharing as much as I used to. Visually anyway, for multiple reasons. Now, I go to silver and I say, well, where's silver, which is my first love, even though I give it short shrift on the show. Where's silver, my first love, on this 4-hour chart? My love, my dear. My first love's actually named Anna. My second level would be silver. And I see silver is nowhere near a sell signal on a 4-hour chart. However, it is showing a regression signal or negation of momentum higher. I think yesterday's headline was Silver Soars, which was up like 10, 20 cents, which is just ridiculous mainstream media stuff. Okay, so now I'm going to put the same 4-hour chart up in gold futures. Now, it's relevant in gold futures versus gold spot. And I prefer doing my analysis with the cash market because I get different signals than I do on the futures market. Continuous charts matter, what you pick matters. And this is very important in products like oil, where the continuous chart may or may not factor in the rollover. And there's gold stories about the rollover and how it usually predicts the price. But what I'm saying here is usually I'll get a signal a bar before on the cash chart than I will on the futures chart. So I actually do look at both. Now on the technicals, I have been politely asked by Michael Moore, who I respect greatly, and I have been trying to get everyone to call him to create a retail product, but it seems that not enough people have. And we had a post the other day about the 50 days to gold to make 5-year highs. And that posted so well. Zero Hedge picked it up. It had 30,000 views. I'm not sure, and certainly lots of people commenting on it. But Michael politely asked me to not include his posts, his technicals into posts, and he said I can discuss them, but please not put charts in there. So I'm going to read for you because I know that these are good numbers and they are good for establishing a range, much in the same way uses Larry uses the straddle to establish his morning range. So why don't we do that, and I will give you Michael's numbers in that fashion. All right. So on the upside, all right, he has an hourly. I should put an hourly chart up here. Uh, why don't we? Well, let's see. I'll just put I'll put the macros up so you can look at that while we're on the hourly chart, and I'll let the Twitter run wild so we can see headlines. I do want to talk about Draghi. Where are we on time? It's 8:21. Okay, we're going to be quick here. So, according to Michael, it would be an idea, not a great idea, but a good idea to get long on a decent penetration of 12.50 to 51 basis February. On the downside, if you're short or if you want to get long, it might not be a bad idea to buy between 12.41 and 12.42. And then again, buy between 12.36 and 12.37. So he has a lot of buy levels underneath the market. Uh, uh, but below 12.34, he gets a little nervous, which makes me feel good because my number is 12.36. $2 means nothing when you're trying to capture 10, 20, $30 moves in gold. But the upside, 12.51, is back where we were before. I said there were stops below 12.51. They were taken out. The market hung there sideways. I'm like, hey, maybe there's stops above. I checked it out. There are stops above. And assuming that the commercials are in charge again, the strong hands who want to short the market, maybe they were going to see if new flow would come in so they could short the market at higher levels after the stops went off, but they didn't, and now the market is lower. Where it goes from here, I don't know. But on a weekly basis, we're still bullish. On a 4-hour basis, we're probably going to be bearish in about 4 hours. So moving from that to just the macro news today. All right. I think if you look at what happened yesterday as a backdrop for gold, yesterday was about China and Brexit. China may reconsider its Made in China 2025 initiative as an apparent concession to the U.S. May consider. I also may consider flying a rocket to the moon. Reports suggest that they've actually already bought 1.5 to 2 million tons of soy. That's also easing trade tension fears. And soy is a big indicator because you can only get it from either us or Argentina on a reliable basis, in my opinion. Prime Minister May survived the vote of confidence, caused more chaos than it's worth, and Italy offered a budget deficit of under 2.2% to the EU. So those things augured for risk off, yet the stock market going to keep its uh, uh, gains yesterday. Now, I'll let you read the Draghi comments on your own. Those are courtesy of Mark Chandler. But the thing I want to focus on about Draghi speaking today, especially swing traders, people on the site like Tracy and Bryn and Larry, of course. Today might be a really good day for counter trading, and by that I mean the market right now could be reacting to something Draghi says. But I think that the overall range of the market will be capped and floored, meaning top and bottom will be locked in, because I think traders really don't want to get too extended because next week's is an FOMC meeting. So it might be good to use the phrase that I actually learned yesterday during the AM Gold Fix to counter trade the news. So when Draghi says something that's bullish in the market, I would be more confident fading bullish news and fading bearish news on a day like today for the rest of the week, especially with the Fed coming out next week. Um, so that's basically it. Why don't we take a quick look at where gold is, and on a daily chart, and you could see that if you're a technician, you look at this run up we've had, and you could say that might be a bull flag, and I would agree. But bull flags usually, and I'm speaking from what I read in the Murphy book, bull flags usually don't last more than 4 bars. So the first three makes me think bull flag. Today, if we close red, I don't think it's a bull flag anymore. I think it's much less likely a bull flag. I'd like to see a breakout above 1250 today if it's a bull flag. But other than that, that's the market. Now, I do have a lot of information today that I hope to post. If I do get it out there, I have a report from UBS on 2019 in gold, which is actually a good one. I have some stock research that I like to get out there as well. Hopefully today. But the Opportunistic Trader isn't a gold site, so we'll give it to you in little bits and pieces. The Opportunistic Trader is a trader site. We'll be doing more options conversations and starting a beginner's class. Those of you who follow me on Twitter have seen the joke pictures that I put up, but they're me working on a beginner's class in conjunction with Tom McInsey. The time is now 8:26. I gotta go. Have a great day, everyone. And uh, if you're in the chat room and I do get a signal, I'll let you know. But right now, bullish above 1236 and biting my nails about it at the moment. But I think I've moved to 1267 is on the table. And if we were to go there, I'd sell it to take profits. Have a great day. Thank you.